Hello, everyone, and welcome to Step Into My Office, Commercial Property Executives podcast series that discusses all things office and flex office related. Join me and industry experts in the field as we take some trips across major markets and delve into investment strategies and opportunities in the sector. Boston's office pipeline has been leading nationally. But what's happening in the leasing space? Are there any shifts investors need to look out for? I'm Olivia Bunescu, Senior Associate Editor, and for this episode, I'm joined by Peter Evans, Executive Vice President and Managing Principal at Hunneman. With over 25 years of experience in the space, Evans has represented landlords and tenants in deals totaling more than 15 million square feet. Today, he delves into the factors reshaping Boston's office market, including which areas and sectors are seeing the highest demand and volume and what's driving deals. Thank you very much for accepting my invitation to step into my office. Today, we're going to discuss a bit about Boston's office and flex office market. I would like to start by asking you, when you look across Greater Boston today, how would you describe the current office market dynamics and what's different in the conversation we're having right now versus even 6 or a year ago?
There's probably three items that I would point to off the bat. One is that it doesn't appear that the sublease market has started to flatten out. We're not seeing a whole lot of new subleases coming on the market. I would say that the investment sales market has certainly witnessed an uptick in transactions in the last 6 to 12 months, particularly institutional sales, as well as some new kind of suburban buyers that are entering the downtown market, trying to take advantage of some of the acquisition opportunities. And then finally, I would say that I feel like the velocity of tenant interest has increased. A year ago, I would say better than 90% of the transactions that were occurring in the market were lease expiration driven. And so I think that today people are getting out and exploring options, and it seems that we've got some graduating, I call them graduating from shared or flex office, that are now starting to reemerge as ready for establishment in a longer term office location.
Mm-hmm. And which sectors among tech, life science, legal, or finance drive the highest demand in Boston? How is it reflected in the leasing cycle?
So Boston is traditionally always, we're driven by lab and life sciences. That seems to have come to a complete halt or a great pause, let's put it that way. Technology still drives a lot of the interest in the office market here as a result of the incubators from the educational institutions that we have in Massachusetts, particularly in Boston, MIT, Harvard, et cetera. It's two examples. But I would say that the greatest concentration of activity in the market in the last year has been from the law sector and financial services. There have been some pretty significant law firms that have either renewed or expanded their footprint in Boston in the last year and a half. I think that would be the greatest one I could point to in terms of sectors. But technology is still, at the forefront of the office market in Boston.
Right. And if we're discussing submarkets, which ones look the healthiest right now and which behind?
Let's start with the negative. I would say that the markets in general that are lagging behind are the low to mid-rise Class B marketplace. It's just the market has gotten so amenity rich as a result of the hybrid and work from home phenomena that landlords and tenants are trying to create their space to be a magnet instead of a mandate. So the class buildings that at one point in time created this really cool infrastructure type space, exposed brick, are constrained by very small floor plates because of the age of the buildings in Boston. And then, from a market perspective, Olivia, I would say that the Back Bay market is probably the tightest and the most successful in the last 12 months from a leasing perspective. It's the most amenity-rich market that we have in Boston. It's got the closest connection to Cambridge over the Mass Ave Bridge. And it's also, it's kind of got that entire live, work, play environment that some of the other markets just don't possess. it's got more of a 24/7 feel than the financial district, Midtown, and then the Seaport is also active, but in a different way.
Mm-hmm. And if we're looking at the macroeconomic environment, so like higher interest rates, and also I know that development is a bit slower in some areas generally. What shifts had the biggest influence on Boston's office market, and how have you adapted your brokerage strategy accordingly?
That's a great question. The macroeconomic environment affects so many different metrics in Boston that people don't even realize. The pause in the lab and life sciences environment is really driven by venture capital and lack of funding of these new and emerging drug companies, scientific companies, has really put the pause on the expansion and interest of lab and life science expansion in Boston. Obviously, the debt environment, the lending environment is very challenging, continues to be challenging. It's been that way for a few years now. And then finally, construction costs really haven't flattened off. It's a very expensive city to do business. We've got requirements of union labor for any kind of construction in New Bellagio. And so in order to address those issues in our leasing is trying to identify space for clients or tenant clients that is close enough to what they need so that we don't have to start from scratch. So keeping the construction costs down is one of the things that we're doing. And then the concession programs in the marketplace, free rent is a much easier way for landlords to get deals done now and get the benefit in the back end of the lease.
Okay, so if you mentioned a bit regarding your strategy to find the right fit for the clients, when you're narrowing options, you typically look at four things: landlord stability, price, fit, and efficiency of the brokerage counterpart. Can you provide an example of how that works in practice, perhaps from a recent listing you made?
Sure. We represent a building in Cambridge that's owned by a local development company. They've got a very strong debt basis on the building. It's located in Kendall Square, which is in Cambridge, which is one of the most dynamic office lab life sciences market in Cambridge. Traditionally been 100% occupied. This particular owner that we represented as the landlord rep was able to beat the market. They built out speculative suites, so they had speed to leasing. They were cost effective in their rental basis. Their leasing strategy was very streamlined. It's not institutional, but because their basis in the building and because their ability to transact their entire capital stack was better than some of the competitors based in the market. This particular building, 201 Broadway in Kendall, in Cambridge, was one of the highest performing buildings in leasing in the first quarter of 2025. And other buildings in the marketplace have had that similar success in downtown Boston. But that's a good example of when we're trying to identify an opportunity for our clients. You know, today there are so many options. We have to remove options that are going to be an obstacle to getting a transaction done when we're representing the tenant. And we utilize that same philosophy from the ownership side. We want to be at the top of the page, not in the middle. So we get an opportunity to see all opportunities of tenants that are in the market.
Mhm. And I know that Boston is among the markets with the highest development activity. I also wrote a feature article on top projects in Boston, and I remember being so impressed by the developments that were going on in Boston. Since you have office and lab space available on the market, how does your company narrow the list of fits into a short list that's realistic to tour without missing a hidden gem? What are the main characteristics you pay attention to?
I think this is probably personal to the individual broker representing the client, Olivia, but in my practice in representing tenants in the marketplace, I look at four things. One is the first and most important for me is the sponsor, the owner, the landlord of the property. The second one is the space. It's got to fit what they need. Our job right now is eliminating opportunities. And so removing any of the obstacles for our tenants. Tenants have a very difficult time with vision. especially if they're coming from a shared office environment. And so visualizing how they would fit within the space, if we can minimize that concern from them from the very beginning, that's really important. I then look to obviously the building itself in terms of what it has to offer for amenities. And again, just let me say, pricing is always a critical component too. So understanding the budget of your clients is very important as well. You don't want to show them something that they can't afford. And so, because they're going to like that more than anything else, which is always the case. And then the last thing is, the cooperating broker community in Boston is pretty unique. And so it's a very easy place to do transactions with when you know that you're working with, qualified brokers in the marketplace. And so we want to make sure that that trust can be shared and it can be collaborative. The process will be collaborative and not contentious. So that's kind of what I look at. I want to make sure that if I'm going to bring my client to a building, I want to make sure that the team representing that building can get it done.
You mentioned briefly, this is just a curiosity of mine. What kind of amenities are tenants more attracted to in Boston right now? Has that also shifted over the past, I don't know, year?
Yeah, I would say yes. I mean, I think that we actually have a new class of building in Boston. I think that there are other major cities in the country that also categorize this. We call it a Class A plus or trophy asset. We've had 4 buildings that have been delivered in downtown Boston that are just incredibly amenity rich. We have a building that was developed by a traditional hotel developer. And so the smell and the feel of a hotel, whether it's in San Diego or Manhattan or Miami, it feels the same. So you walk into that hotel and you recognize it's a familiarity. And office buildings are starting to adapt similar qualities. I would say that the amenities, when they used to just check the box, fitness, on-site management, a cafeteria, you could kind of check those boxes. I find those to be incredibly elevated now. It's sit-down restaurants as amenities. It's very large scale fitness facilities that are complementary to the tenants. It's outdoor space. And when I say outdoor space, I mean it's common roof decks and common patios that overlook the city or the skyline or the harbor. And so again, it's back to that magnet versus mandate. The buildings, it doesn't seem to be an issue with price as much as it is creating an environment for your employees to want to go to. So it's that Class A trophy asset class that captures all of those amenities in the building so that there's no question. The problem is that the buildings that have traditionally been in that Class A category, they're playing catch up now to try to upgrade their buildings to meet those same demands of the tenant base. And, it's hard, the people like shiny and new. And there are some transactions that have been occurring and rumors of transactions occurring that's missing out on a lot of the traditional Class A buildings that are now going to these newer developed assets.
Mm, all right. Regarding the Class A, B, and C spaces, there's an opportunity now for Class B and C tenants to move into Class spaces. What's the advantage of doing that today, and what could surprise them when the market tightens?
Well, here's the reality that we used to call a flight to quality. While I think we still see that in some instances, that flight to quality is really only happening in sublease space that's available in these Class A assets or in Class A assets that have been sold at a discount and the basis on the building has been reset. So that flight to quality opportunity is occurring, but it's not as evident as one would think. If the asset was acquired in the last 7 years, the basis on that building, nobody has ever underwritten a sale of a building for the asset value to go down. They'd never raise any money to sell for their investors. So if they bought a building 7 years ago and the market corrected in 2019 with the onset of COVID, the basis on the building hasn't changed. The only way that the basis changes is if the building transacts and is sold, and that's either due to debt maturity or foreclosure by the former owner. So that flight to quality is there. The challenge for flight to quality in a market like Boston is that once that sublease expires 3-5 years from now, or that initial term that you do to take advantage of that new basis, the market is going to adjust. And it's the affordability of that in 3 to 5 years and whether or not your company can sustain that. And the reason that that's challenging is that you create an environment for your employees that's not sustainable on long term. And so there's a risk of having to go backwards. Nobody likes to be assigned a private office and then have it be taken away. Nobody wants to be in a building that's got an unbelievable gym that's free and then have to go back to a mid-rise building that doesn't have those amenities. So it's a tricky balance for the brokers to make sure that they're communicating the long-term commitment of that asset and what we think the market is going to look like. It's a little bit difficult to forecast in this environment we're in right now in terms of what the market's going to look like in a year, never mind 3 or 5 years from now.
That's such an interesting and refreshing perspective because in every podcast episode, I hear the flight to quality movement, and everyone is viewing it as such a huge trend in office. And this is, I think, the first time I've heard this flight to quality trend viewed in such pragmatic manner, if that makes sense.
Yeah, I mean, and again, I think that the reality of this discussion is this is one person's opinion on the marketplace. I think that I've got a pretty good grasp on the dynamics of the Boston market, having been in it for 30 plus years. And this is a moment in time that none of us have witnessed. I've been through plenty of corrections in the marketplace since I started, both on the ownership side as well as on the brokerage side of things. I think that previous corrections that we've had in the market, Olivia, you can point to what the cause of the correction was, whether it was the '01 tech bubble burst, it was the '08 financial crisis. The challenge that we're in right now from COVID, the results of COVID, affected everybody. It didn't just affect people that were invested in the technology business, invested in the real estate and financial, had some tie to the financial networks that were affecting the downfall of the marketplace. COVID affected everybody involved in real estate, but also people not involved in real estate. Nobody's really talking about the retail sector struggling in these buildings that were once occupied by thousands of people that aren't open for lunch anymore because they can't sustain their rent because there's nobody buying sandwiches. The bartenders, the waiters, the maintenance people, the landscape companies, everybody was affected by COVID that has some sort of connectivity to real estate. And that's a phenomenon that we haven't seen before. And it's slowly coming back. But until there's more activity and velocity in these beautiful buildings, we're not going to see the entire recovery occur. So, that the difference now is that we're trying to stabilize, and I feel like the market is stabilizing, but there's still some challenges ahead.
And when we're talking higher vacancy rates, tenants aren't seeing bigger drops in rent prices. How do you explain this gap?
First question I get whenever I talk to somebody that's not connected to the real estate business is, oh my gosh, there's such great opportunity in Boston for leasing space. The reality is that until the basis in buildings is corrected and caught up to with the market, there's still going to be a higher rent, particularly with institutional investors that own real estate in Boston, both domestic and foreign. Their basis and their underwriting from the last, 5 to 7 years didn't calculate for a down market and for decreased rents. So the rental quotes are all about the basis in the building. What has increased in order to get that basis down is concessions. I can give you a very good example of a transaction I'm working on right now in the Seaport where I represent a tenant that's entering into a 5-year lease, coming out of a co-working location. They're coming out of Industrious. They're graduating to their first space, and albeit 5,000 square feet, it's really important to them. But part of the transaction is we're getting 6 months of free rent. And that's 6 months of free rent. If the rent in year one is $60 a foot, which is where the basis that the landlord needs to be at, the effective rent for the tenant is 30 because they're not going to be paying rent for 6 of that 12 months of occupancy. So that equates to a flight to quality, but it also typically the free rent structure concessions go on the outside of the term. So this will be a 5-year, 6-month lease, and the rent goes up on a percentage basis every annually. And so they'll be paying the higher rent in the back end. So the landlord is getting, while they're taking a hit up front right now, they're getting the benefit of that much higher rent in the last 6 months of the last year of the lease.
You mentioned briefly industries and co-working. I also cover co-working for commercial property executive. And since I started covering it, I've seen it take multiple forms. It's the traditional co-working, it's landlords subleasing their space as like flex office. How do co-working or flex fit into Boston's office market? Is it, a long-term solution or an addition to a smaller core lease?
So I would say the progression of tenants in Boston historically has been, most of the colleges and universities in Boston have incubator space that they provide to students to create startups within the campus setting and the campus environment. They then graduated to a WeWork or to an Industrious or to some other form of co-working, and then they would expand to their final space. The co-working environment is a result of the demise of WeWork. The confidence of WeWork is still waning in Boston. They still have a very large presence in Boston. I think the biggest shift since Industrious promoted their platform of partnering with landlords instead of leasing the space on their own, sharing their upside with landlords, has changed the stability of the Industrious platform here. But then we also have this phenomenon in Boston with major institutional owners like Tishman Speyer, Boston Properties, Oxford Realty Group that decided to create their own form of co-working within their towers in downtown Boston. The idea was to try to capture these tenants on a short-term flexible basis in the hopes that when they grow within the portfolios that are owned by the institutional owners. So there's a lot of options for tenants in Boston in terms of looking for this co-working space, and whether it's directly with a major landlord or it's with one of the known co-working businesses. That continues. I haven't put anybody represented a tenant in several years to go into a co-working space in Boston. I have done a lot of work with both corporations as well as individual companies within WeWorks and Industrious in my career, but I haven't seen a lot of it of recent. I've seen more the other side of it. We're working with groups that are growing out of these co-working environments and now looking at traditional space.
All right. And one last thing, looking ahead for the next year, what are your predictions for Boston's office market?
Wow. I keep bidding on that crystal ball on eBay and I keep losing. That's a great question. I think we're going to be still in a corrective mode for the next 12 months. I think the worst is behind us, but I think it's going to be some time for us to get back to some level of normalcy. All of the metrics are pointing in that direction. All of the surges in Boston's market historically been supported by some sort of rapid growth of some industry sector. The industry sector right now that seems to be leading the charge on the West Coast is AI infused. And I think that only a matter of time for that to pivot to the Boston market and create some sort of a surge here. I don't think we'll ever see anything like the growth of the lab and life sciences environments in Boston again. I just think it was too quick, too much, too fast. But I would say we're going to be stable. I would anticipate us seeing, we just have the first portfolio sale of 4 downtown office assets come on the market by an institutional seller. And it'll be interesting to see what kind of activity that draws. There's still a lot of capital. There's still a lot of interest in investing in Boston. But I think until we start to reset some of the bases so that we can attract more tenants to come to the availabilities in Boston. It's going to take time. But I think the next 12 months, we're going to be looking at a fairly stabilized situation to where we are right now. There's some large transactions that are on the horizon. There's rumors of some pretty significant tenants that are about to commit to some large blocks of space in downtown, relocating from existing real estate. So it's not like a net positive absorption for the marketplace, but it is showing a positive transaction volume. And positive transaction volume starts to ripple into other areas of interest throughout the city. So that's the way that I see the next year going in Boston. And, it's exciting time. One of the things that people need to always constantly remember about Boston is there's an ecosystem here that's unlike any other in the country, from our healthcare to our history, education, hospitals, financial services. We kind of touch all the bases. And, it's a gateway city that has a changing skyline like nobody's ever seen before with the growth of the seaport area. But there's also major towers popping up that are just being delivered to the market right now that are transformational to our skyline. I think Boston's always going to be on the top 3 of people's lists when they're thinking about cities that they can expand and grow in. It's an exciting time to take advantage of the opportunities that we have in front of us right now.
It surely was one of my favorite cities to cover for the top project series, and it still remains, I think, the primary city I would like to visit if I ever come to the US. So, yeah. Thank you very much for the conversation. It was a very refreshing one.
Great. It was my pleasure. Thanks for having me.
Thank you for stepping into our office. Stay tuned for the next episode and feel free to rate this one if you've enjoyed it. For more commercial news, trend stories, and podcast episodes, visit cpexecutive.com. Moreover, don't hesitate to join CPE Executive Council. Every month, we discuss the latest trends and topics with leading experts in the field, and your input could be extremely helpful. To join, please send an email to jessica.fiur@cpe-mhn.com. Have a great day!